Hi, everyone. Welcome to today's webinar, Delivering Value in a Virtual World, Successfully Running a Small Business During COVID-19. We're really glad that you were able to join us. Just a few house rules before we start. Your mics will be muted for the duration of the webinar to ensure that we can maximize video and call quality. We'll leave ample time for questions and answers, so we encourage you to use the chat function to send us your questions throughout today's discussion. And we encourage you to join us over video if you're comfortable with turning your camera on. So we're going to kick off today's session by turning the mic over to our moderator, David Press, founding partner at Confluence Partners. Welcome, David.
Thanks, Carmel. Good morning, everyone. It's nice to be here with you. I think we all recognize that you have many webinars to choose from these days, and we're very appreciative that you can spend a little bit of time with us this morning. So we will try to make this as information rich and enjoyable as possible. As we all grapple with this crisis, we think that there's real value in sharing learnings and perspectives along the way. And that's why we're here today. One area that we think deserves more delving into is how small businesses are pivoting and managing through this crisis, where we're finding success, where we're running into headwinds, and really how we stay inspired and keep on going. So everyone here on today's panel is either the owner of a small business or runs an entrepreneurial group within a larger business like Will. We all also happen to be in the impact investing space. In fact, that is how I think we all know one another. For those of you that are new to impact investing is one of the fastest growing and most exciting spaces in finance today. And I think that pace is only going to accelerate as a result of this crisis. And everybody here on this panel brings different perspectives about the opportunities and challenges ahead. So by way of introduction, I'm CEO and founding partner at Confluence Partners. We're a communication strategy firm, and we do a lot of work in the impact space across all asset classes and sectors. We spend a lot of our time trying to use the levers of communications to drive businesses forward in very tangible ways, and no more so than an impact. We like to say that we champion the real innovators and unsung heroes who are bringing new thinking and solutions to the space to help it scale. And it's our mission as a firm to try to help those actors rise above the noise and thrive. So speaking of big thinkers, we have several with us today, and everybody on this panel is really a luminary in the space in their own right. So I'll just do some brief introductions and then we will get going. So Rahana is the founder and CEO of Spectrum Impact, our host today. So a shout out to you, Rahana, for arranging this for all of us. Spectrum is an impact investing consulting firm that helps organizations design and execute impact-oriented programs and products. Jen is the CEO and co-founder of Align Impact. Align Impact is an independent, specialized impact advisory firm that serves and collaborates with individuals, families, foundations, and their financial advisors to increase the effectiveness and alignment of philanthropic grants, impact investments, and mission-related investments. Will joined Kiva last year to launch Kiva Capital, their impact investing subsidiary. And after launching the Kiva Refugee Investment Fund, which is fundraising now, Will is now adding a team to Kiva Capital to launch an innovative gender lens strategy, and we'll look forward to hearing a little bit more about that during this discussion. Chintan is a founder of RPCK. RPCK is a specialized law firm that has developed a real expertise for guiding multiple bottom line investors and entrepreneurs on a range of matters, most especially a variety of innovative capital raises and business building transactions. RPCK works with some of the leading impact investors in the world, including family offices, funds, and advisory firms, and recently celebrated their 10th anniversary. So congrats to you, Chintan, for that. All right, let's dive in and let's take it from the top. I'd love it if each of you could talk a little bit about some of the challenges that you are facing as a small business and how you've been managing through them. And Jen, why don't we start with you, if that's okay? I think, are you muted? Okay. Oh.
We go.
There we go.
I don't get to control that part. Thanks for having me. I'm glad to be here with fellow colleagues and change makers. I think some of the challenges that the whole ecosystem, and we're not immune to it at Align, are really threefold. One is, most important, are people, the people that are on our teams, and making sure that they're protected from a health and well-being. That includes mental well-being. And that they have an outlet to continue to thrive and do their best work while feeling supported virtually. The second is clients. I think clients, we have to adapt. We've had to adapt in how we deliver our services. We've had to adapt in terms of meeting our clients where they're at from an emotional perspective. Some of our clients own operating businesses, so we've had to jump in and really help them navigate these unprecedented times in their own operating businesses. And some of our clients are wanting to deploy capital inside of the current environment in the short, the intermediate, and the long term, which requires us to escalate our due diligence and be able to be responsive while still being prudent and holding true to our due diligence and our rigor behind our due diligence. And then lastly is really the people on the front lines, right? How do we move capital to the people that actually need it most effectively, and really fill a gap where government isn't doing it or there are no other backstops. I really feel that our industry was built for this moment, and that great companies, especially small companies, are usually built inside of crises. If you look back to 2001 or 2008. And so I would just go back to it's really human capital. It's your people, it's our clients, and then ultimately it's the frontline workers, the kind of the engine of our economy that I think has been neglected for a while. And I'm happy to say more about that throughout the webinar.
Great, thanks, Jen. And that's a great point that you made about, small businesses and impact investing kind of having a moment now, and we'll come back to that because I think that's a great point. But let's go on down the line. Chintan, maybe you can talk a little bit about what you're seeing in your business. Oops, who unmutes them?
There we go. Hey everyone, of course. Perfect. Okay. So thank you, David. I just wanted to kind of reflect a little bit on what Jen was saying, right? So I definitely agree, that the human capital piece of it is critical. I would say the piece that I would add is that, in business, right, in investing and building a business, et cetera, right, kind of business leaders operate in a time of uncertainty, right? That's kind of the normal status quo, right? You don't know what's coming down the pipe. And as a good leader of a business, you have to be able to manage that and lead your team through that. And this is a very, a particularly unique time of unprecedented uncertainty, right? So as a business leader, you start to kind of see patterns, and you start to be able to kind of understand how your business, your enterprise, your investment team, whatever the business happens to be, kind of fits into the world and the risk picture that you happen to kind of operate within. And then you find your footing and you move forward, and then you kind of you take in more information and you kind of analyze that and you kind of adapt and you move forward. This situation, I think has turned a lot of that, on its head. And so the kind of old models of understanding kind of uncertainty, understanding risk, understanding kind of how to find and take advantage of opportunities and grow an enterprise, grow a business, et cetera, those are all being challenged, right? And we're all, reevaluating those, right? So I can speak, from my perspective as someone who's kind of running a business, but I can also speak from the perspective of, the various different people that I work with, right? Kind
Right.
of our clients.
Yeah.
And, as an advisor, right? As someone who's sitting next to them and kind of helping them kind of process information and analyze that and apply that to their particular, to their enterprise.
Terrific. Will, I'm curious to hear from you, particularly since you're launching a new product at this time. So tell us a little bit about the thinking there and what you've been seeing.
No, thank you, David. It's a pleasure to be on here. If there's any background noise, I apologize in advance. That's just my imposter syndrome alarm going off for being on a panel with this distinguished group. It's been really interesting. I think, Kiva's been around for 15 years, and we've really been built to facilitate the flow of more capital to small businesses. And, if that wasn't, if the need for that wasn't stunningly obvious before the crisis, I think it is now. I think the challenge that we've had is we're obviously in the right fit right now for how to respond. But how do we look at the thousands of different opportunities to respond without completely disregarding kind of our long-term mission and some of the long-term plans that we had? How do we pivot and tweak some of the processes and products that we have now to be able to respond directly while still kind of maintaining that long-term goal of maximizing financial inclusion? And so I think the struggle for us was whether we take everything that we were working on and pivot those tracks to be able to respond, or if we see what will add the most value today. And so there's some existing funds that we've got at Kiva Capital that we are adjusting to be able to fit in with the new reality. But there are some long-term plans, that we're sticking to in regards to a new gender lens strategy that you mentioned, right? That strategy probably doesn't launch for 2 years. How much can we tweak that to address the situation today? I think we've made the decision to tweak other products that we have that we can bring to bear right away. But then factor in exactly how these kind of long-term plans will be there and can play a role in the recovery from this crisis.
That's great. Rahana, I'd love to hear from you, particularly since you have such a vantage point into so many different types of clients, but particularly, obviously an impact. And I'm curious how your notion of client service has evolved.
Yeah, it's a great question, David. I think, quite frankly, our biggest sort of challenge right now is very connected to the way that we provide value, to your point. So a lot of our work is about engaging with organizations that have made the pledge towards impact investing, but have absolutely no idea how to get started. And because that's our entry point, as you can imagine, education and training and advisory are pretty critical for us. So in almost every engagement, we spend time with some combination of the board, the C-suite, senior management, middle management, most junior staff, most senior staff, just to make sure that we're level setting on what impact investing is and what it could mean for the organization. And in light of COVID, most tactically, not being able to be in person and be in boardrooms and be in offices and deliver that training has actually been very complicated. And our clients, as diverse as they are, all need an element of that. So we're navigating, quite frankly, at the most personal level to try and figure out how to better deliver services in a time where we just can't do that. And it's difficult. It definitely works for some clients that are already on this virtual train, and it does not work for other clients that really value the in-person interaction. So a core piece of what we do is changing in real time.
Wow. And talk a little bit, I'm curious about the personal aspect you just mentioned. Yeah. Talk a little bit about that.
Yeah, I mean, it's, I think Will's, sorry?
I think we're all grappling with that.
Totally. I was just going to say Will's imposter alarm and my imposter alarm are linked together. So I'm sure everybody has got something that they want to add to this and has a very nuanced perspective here. For me and for us, I actually think the hardest part of this work, which everyone has touched on, is delivering on the commitment of really good value for clients and doing it in a way that feels subpar just by nature of the pandemic. So COVID is not anybody's ultimate operating environment, and we're all client focused, whether that's the end beneficiary in the field or the client organization. So how, in the context of this new normal, do you continue to deliver the best value? And I think that's a personal, for me, that's a personal conundrum on a daily basis, that since all this started for us in March, there's not a day that goes by that we don't have some sort of client meeting, and me and my colleagues sort of get together and say, do you think that did what it needed to do? Did we actually honor the letter of our contract? Did that have the effect that it was supposed to have? And it's pretty hard, I think, in this virtual reality and the lack of face-to-face to feel totally and truly good about all service delivery in this virtual world. It's bizarre.
You know, one thing I'd love to hear from each of you on is the investor side of things. We've all talked about it individually at various points, you know, and you all touch investors from different perspectives, whether you're managing money or advising it or changing what it's used for. You know, I know from our perspective, certainly with asset managers, we've just seen such concern over getting the tone right. You know, what's the outreach look like? How do you stay connected? You don't want to be over communicating, and, you know, how do you fundraise in this environment? So, you know, I'm curious what you guys are seeing and thinking about the investment side. Chintan, let's start with you.
Sure.
Yeah,
absolutely. Absolutely. So it's a super interesting question. There's so many kind of facets to it, right? So I'll say a couple of kind of big picture themes that you know, we've experienced, right? So I think that in a lot of the kind of private equity venture space, especially towards the beginning of the pandemic, you've had this kind of pull back and wait and see approach to deploying capital, especially into kind of, you know, uncertain and potentially kind of tumultuous kind of situations, right? So something that, you know, before COVID hit, right, you know, looked like a kind of surefire bet, a great investment, you know, kind of past investment committee and yada yada yada, right? And, you know, a week later, it's the opposite, right? It's a full 180, right? And we've seen, you know, a lot of people do that, and that's totally understandable, right? And I think that comes, you know, that comes out of a particular mindset of, you know, of an investor. We've also seen the opposite of that, right? And that's primarily kind of in the impact investing space, where a lot of people kind of have, you know, a broader kind of multiple stakeholder kind of focused approach to what they're doing, and have a mission driving the, you know, investment activity that they're engaging in, right? And so, you know, in our experience, many of our kind of you know, kind of folks that we work with, you know, whether they be kind of funds or family offices or, you know, angel investors or, you know, people that have a mission driver behind what they're doing, really kind of step up and run towards the problem, so to speak, right? And have been deploying capital extremely actively, and have been, you know, so the activity has gone up significantly, but then I would also say that the creativity level and the kind of the sense of kind of being super thoughtful about what one is doing and how they're going about doing it. Meaning the old way of just saying, all right, this is a venture deal, this is a, you know, debt transaction or whatever, that hasn't, you know, I think that has proven to be insufficient. And so so I would say kind of in the impact world, kind of more broadly, significantly kind of increased activity, as well as kind of thoughtfulness and creativity with respect to that activity that's going on.
I love that point. I'm so glad you raised that. And I'm going to bring it back to Jen, because Jen, I think this is sort of what you were talking about earlier about impact having its moments. And I have to say, Jen said something to me a few weeks ago, and I think about it every day. And it's about how some of the investors that Align works with, you know, their response has been, how can we help? What can I do? So I find that incredibly inspiring. So Jen, maybe you can elaborate.
Yeah, I'll echo some points that Chin made, but expand on them. One would be, if not now, then when? If we're not going to rise to the occasion in this moment, are we ever going to? And I would say that I'm an eternal optimist if you know me well. I believe we can eradicate poverty and climate change on this planet by 2050. I'm going to still stand in that in light of the current moments, but it's going to take radical shifts of our systems. And it's going to come down to collaboration, public-private partnerships. We actually mandate that our clients spend a significant amount of time up front in the first part of our relationship, really figuring out their why and building out their strategy. And that has proven to be an anchor in this time because we already know what we set out to do in the short term, the medium term, and the long term. The long term could be 30 to 50 years from now. It could be the fourth generation of a family. This entails multiple entities and multiple investment objectives, right? So I would say collaboration is a big piece of it. And then being able to execute on what you set out to execute on thoughtfully. Right? Chin said thoughtful part as well. I think that one of the things that we're helping investors with is how do they actually pivot, not the strategy, but how they execute the strategy, right? How do we use new financing tools that maybe we weren't using before to actually fill a gap that we see? How do they work together? Our clients have always worked together, but I think they're working together more, right? When we went out to survey the landscape, and that's what we did the first 4 weeks out of the gate, we really tailored everything to each client, local, domestic, global. Where are they focused? What did they set out to do? And then we looked for partners in the field to partner with, right? We didn't go create it ourselves. We said, what are people doing? These proven CDFIs are building product or platforms that we can jump off of right away. And we can advise clients on which bucket it fits in and which lever to use right now. And then as that capital is recycled in 6, 12, or 24 months, maybe the world will be a little bit more stable and we'll be able to put it in other things. We're not pausing on investing in new private equity, private debt, real estate, or other investment opportunities, but we're going to be cautious about it because we don't know what the environment looks like in the short run or even the next 12 months. We are in majorly uncertain times. And I'll say, we also don't know what the other LPs look like. I can control what the investors of a line look like, but I can't control all the other LPs that I go into a deal with, and we end up, collaborating together to drive the needle forward, right? And what their scenario looks like and what their capital looks like and what headwinds they're facing. And so I think we also need to take a moment and say, let's use this opportunity to do more collaboration. While we're way more collaborative than the traditional investment arena, we still have a long way to go because we still operate in a lot of silos when we could operate much stronger together. I like the African proverb, if you want to go fast, go alone. If you want to go far, go together.
I love that. Will, I'm curious to hear a little bit about your perspective working inside of a larger firm. I know you said to me sometime recently that today is the worst time, now is kind of the worst time to have an off-the-shelf product. So maybe you can talk about that a little bit and what your thinking is like in terms of being in a startup in a larger company.
Yeah, and I only speak from what admittedly little I know about typical kind of impact investors. This is not kind of investors writ large, but I would imagine the type of investors that Jen works with, that Rahana and Chintan work with on a daily basis. Right now they're seeing 100,000 deaths in the United States alone. For the type of investors that we work with, that we want to work with, asking them whether they want to change their S&P index fund to a new product because they have a new stock lending system that'll add a basis point to returns every year. I just don't think that the investors that we work with, that we want to work with, frankly care at all about that right now, right? I think that's something that these are all sophisticated investors. That's important to them in a normal course of business. But right now is anything but normal. And so it's this desire to, as Jen mentioned, how can we help? What can we do? How do we take advantage of this to really drive value and drive impact and drive the systems change that Jen talked about. And so I think if you have a commoditized product where you're trying to differentiate yourself either through pure branding or really kind of minute pivots, I would hate to be in that position right now. I feel really grateful to be in the position where we are now, that many of us are in, that we can offer truly differentiated products and some product that can drive value today.
Sure, makes a lot of sense. Rahana, I'm curious. You and I had a discussion sort of related to that, about related to what you were saying earlier and what you might have done with the benefit of hindsight.
Mm-hmm.
I'm curious, what would you have done differently if you'd known that we'd be where we are now?
Yeah. Well, Will,
what would you tell your clients?
Right.
Yeah.
No, Will very thoughtfully and articulately reminded us that everything that's going on now is everything but normal. And I think that has been ringing very true in the work that we do. So sort of along the same lines, David, of your question around investor behavior, because we serve investors primarily, whether they are asset owners or asset managers, their behavior deeply determines how we do our work. And I think we've found that even more now than before, the clients that find us sort of self-select into two categories. The first category are the organizations that are coming to impact investing from a risk aversion perspective, right? So starting to believe that the narrative out there that not considering these factors is actually poor risk management. And if you are a risk-wise organization, which you need to be now more than ever, considering environmental, social, and governance factors is critical. Fine, that's group one. And they really respond to quite a bit of data that's coming out in the market helpfully, right, around performance of impact-related products versus their non-impact peers. Right. But the second group of investors that are coming to us anyway are the ones, to the points that Will, Chintan, and Jen have all made, the ones that are looking at this moment in time and finally starting to move from, the system's not working, the system's broken, to, oh my goodness, the system's broken, and if we are not poised to do something about that, what exactly is our capital doing? And so the hindsight question for us, quite frankly, is spending a little bit more time with that second group. I think our business model really has been around more traditional investors that need a data-driven approach to convince them to get into impact investing. And it has been from a position of fear. And more often than not, we were not spending a lot of time with the impact-aware audience that really just needed that global moment to kick them into action. And I think the way that we would have done that in the past is actually how we're doing it now. So everyone on this panel, and certainly most people on this call, are amping up the amount of thought leadership and resource and free guidance that their firms can give to the impact community. And we've started to do that too. In hindsight, we would have started earlier, because I think we're really realizing that there is a whole community of investors out there that have been toying with the idea that things are not working, and we're really just waiting for that moment in time to see that in living color. And we're there now.
That's a great point. Jen, I'd love you to pick up on that thread. I kind of feel like Align's been, this moment's like tailor-made for Align. You've been waiting for this in some ways, but, I'm curious as your perspective about what might have you done differently and responding to what Rahana said.
Well, I'm glad I didn't try to start building it a year ago and then have to face this. So thank God we've been building it for 6+ years. I would say, one thing I want to jump off of what Rahana said was, this is the beginning. We're not anywhere near, we're just at the starting line, right? If we think about this pandemic and what we're going through as a global community, we are more interconnected than we've ever been. And we actually depend on each other. Our supply chains are interconnected. Our systems are interconnected. Our economies are interconnected, right? And if we think about that, if we just pause for a moment, we can't put things in silos anymore. We can't put people of color over here, women over here, the developing world over here, climate change is this whole other animal over here, and I have no idea how I'm supposed to tackle it. I'm a social person. I want to focus on social. These things are all interconnected. I think if I had to do it all over again, I would say my gut reaction is more isn't better. It's like, how do you really dive in and really like say, what can we do with even a little capital to really have that one pebble have a huge ripple effect, right? And how do we get everyone to join this movement, regardless of how much capital they have? Because every individual on this planet has some skill, talent, story, perspective, where they actually could, them as one person could change the world if they actually took on their own why. I've said this for a long time. It's like, what would you move the needle on and why? And if everyone identified that for themselves, I think we'd start to have radical change. But partly what we face today is people feel alienated. People feel like, well, I don't have enough wealth, so therefore I can't participate. Or I'm just one person. I can't really shift climate change just myself. Or I serve retail or smaller investors, or I have a 401k and I don't have access to these opportunities inside of my investment vehicles. And that's where I say, if I could do it all over again, I'd have a solution that meets everyone, right? That doesn't exclude anyone, and that everyone felt welcome. And it wasn't just a certain demographic of people that could, for lack of better words, play the game.
Thank you. You know, before we move on, if anybody who's listening has any questions, they can feel free to type them into the chat next to the Zoom, next to the video, and we can start responding to those shortly. Chintan, you know, I would love to hear sort of some of your learnings and what you might have done differently, or but also, you know, I always feel like you have your finger on the pulse, just given the kinds of transactions that you do, on just some of the real innovation that's taking place in the sector. So I'm curious if you have a crystal ball as to what's ahead a little bit in terms of innovation, and who's going to be participating.
Sure, absolutely. So definitely no crystal ball, right? But I think there's a lot of really, there's some really, really great points here. I wish I had a crystal ball. I feel like you might have a better one than I do. So, you know, your question's great, right? Because the two pieces actually tie very nicely together, right? And it actually touches upon, or you know, kind of the point that Jen was making, right? This notion of kind of individual action and whether that's enough, you know, and the tools and the structures and the things that are available out there. You know, I would say that a lot of what people are feeling and experiencing is driven by the tools and the opportunities that are available to them, right? It's kind of like, well, it's hard for me because I, you know, am not an ultra high net worth individual to get involved with, you know, financing, you know, an amazing, you know, social enterprise in, you know, another country, right? It's very hard to get access to that. Well, it's very hard to get access to that partially because of the way the whole architecture of the legal and finance, you know, and regulatory system has been built up, right? And,
Sure.
You know, it's not inherently, there's no reason that it has to be this way. It's not inherently impossible for someone to do that, but, you know, we have the SEC and, you know, securities laws, and you have, you know, kind of minimum investment amounts, and you have all of these things out there, right? So, you know, looking at that, right, and that one of the things that we look at, and one of the questions that we get asked a lot is, how do we kind of challenge the existing system, right, while still maintaining and operating within the law and within kind of all of the kind of regulatory and legal guidance and, you know, and parameters that exist? How do we start to change the system from within, right? And that's kind of the perspective that we have. And there are certainly ways to do that, right? It gets you know, complex because of just the nature of the system, but it doesn't necessarily have to be. And one of the ways that I would highlight is something that Jen mentioned, right? Which is this idea of partnerships, public-private partnerships, or more generally blended finance, right? It's kind of a relatively new concept that people are talking about. But the basic idea is that, various different groups that historically wouldn't play together in the same sandbox, right? Whether they be philanthropic actors or profit-seeking actors or governmental or non-governmental or international organizations, et cetera, they all kind of stayed within their lane and they did their thing. And it was highly disconnected. And, any synergies that existed among them were really just kind of consequential or kind of incidental to what they were doing, right? There wasn't a lot of thoughtful planning and intentional coordination between these different groups that, in the impact, with the rise of kind of the impact investing and social enterprise kind of space and community, people have started kind of finding common vocabulary, common kind of perspectives, right? This notion that as an impact investor, you have multiple bottom line objectives, and those happen to coincide with things that people in the philanthropic world happen to talk about. And those happen to coincide with things that, people in the, international development world happen to talk about, right? And so now all of a sudden you have this kind of common ground that people are, kind of discovering. That may have always been there, and now they're kind of discovering. And so kind of blended finance refers to, building structures, building relationships, building incentives and objectives that are common where, a philanthropic and a governmental and a profit seeking and an impact investor can come together, right? And, another, I keep coming back to Jen, but, the other thing that Jen mentioned is oftentimes she's operating in a space where she doesn't know who the other LPs are, right? Like or the other co-investors in a cohort happen to be. As and when you see, or as and when this field develops, I think you'll start finding more commonality and a greater ability to coordinate activity. Just kind of from a pure market perspective, right? But coordinate activity so that you can actually start driving capital and energy and kind of human activity and, the various different things that people happen to be good at or the assets they happen to have, whether they're financial or otherwise, in common directions, right? In common, along common objectives. And that's kind of what I see, developing. That's a lot of the stuff that we're working on right now. That's kind of, frankly, the most interesting and fun stuff that we happen to be doing. And it's super encouraging to see that.
That's great.
Yeah, David, I'd love to add one more point, just
Sure.
because it really is bringing it all together. It's got to be a win-win-win, right? It's got to be not just one win. And we have to move from a me and I to a we, right? We have to move from a me success to a we success. Like we're all either going to succeed together or we're going to go down together. Like if that's not more apparent now, I'm not sure what is, right? Like the stranger next to us matters. And the frontline worker and the grocery store clerk and the people our teachers, the people that we maybe have undervalued in society for a long time, they're the engine to the economy, both here in the US and in the developing world. And so we got to move from a me, how can I succeed, or how can I get ahead, to how can we get ahead?
Great. We do have a question in from somebody listening in, and it's about the role of SDGs and how and whether you incorporate that into your conversation with clients. Will, I wonder if you could take a shot there at starting us off.
Yeah, and I think one of the truly fantastic things about being at Kiva is having the resources of a deep impact team who's done some pretty incredible work around the SDGs. And I think at Kiva Capital, we've made a kind of concerted approach to link what we do, obviously, with the SDGs, but to move away from something I've seen from some large asset managers where they say, that this fund matches 16 of the 17 SDGs, which seems awfully convenient. I think our approach is really looking at, we want to go deeper, looking at the sub-targets and the sub-goals within each SDG, and really kind of try to track to a few SDGs A lot of the work that we've done, to echo on something Chintan and Jen have talked about, is based on partnerships, right? We're a small organization within a small organization. To do what we want to do, it has to be through partnerships. And we've been incredibly grateful to see the way that large foundations, DFIs, corporates have responded in this. Our perspective is that we can really look to focus on kind of underserved capital needs, tie that to one or two specific SDGs. My sense is that you will get more large universal asset owners moving to a kind of an SDG focused approach, and therefore looking at every single kind of sub goal through their portfolio in the 17 SDGs, and looking for opportunities to invest in solutions that track to individual goals at the deepest level. And so our approach is to go kind of very narrow, but deep.
Cool. Rahana, what about you and the SDGs and your team at Spectrum? How do you incorporate them into your work?
Yeah, it's actually a great question, because it's a constant reminder for us how much of this game, our game, is about translation and accessible language. So many of the clients that come to us are so early in their journey. They've decided to do impact investing. They have absolutely no idea how to get started. And the value of a common framework or a common language like the SDGs allows us to move our clients from what I think we'd all agree has been a very output-driven conversation. So how many girls do I put in school? How many loans do I give? Very, very metric-focused, output-driven wins.
Yep.
And it has not allowed a conversation around what's the change that I want to see. And Will, Jen, and Chintan have all spoken to this, that if now is not the time to talk about large-scale systems change, system is broken, time to fix it, then when is? And so for us, the SDGs are a way to create a common language where we can say to our clients, what are the changes that you want to see? And to Will's point about the sub goals, one of the things about that framework that I think works really well is that they have these high level systems goals up at the top. I want to eradicate poverty, and then multiple different ways to measure and manage what a program looks like to that end. So for us, when we have these clients that walk in the door and sort of say, I'm going to build a VC fund in healthcare, we have the ability to say, that's awesome. What do you want to change? Forget about the vehicle and the type and the sector. What are you trying to do? Oh, we're trying to change the way that low to middle income people get access to healthcare. Great. That's something that we can operationalize. And so I think it just helps, like all frameworks, to expand the conversation to the one we should be having instead of the conversation that we inherently start having.
Yeah, for sure. Jen, I see you smiling.
I laugh because what it brings up for me is when we go into the developing world, we go in with our Western views and we say, this is how we think we should fix it. When in reality, we don't even have an inkling of an understanding of how they live day in and day out. And actually, if we allowed them to fix it themselves with providing them the right assets, skills, resources, they'd actually fix it in a way that actually had their system work, right? So everything that Rihanna was saying, I was like, yeah, we do this day in and day out, which is what had me chuckle. It's like, let's start listening. And I also laughed when they come in and they say, I want to build a new healthcare VC fund, because my initial reaction is, well, wait, there's a bunch out there. Why don't we do due diligence on what's out there and see where there are gaps, and maybe there's a way to partner. It's the same thing on the charitable side, right? There's 2 million plus charities in the US alone, right? We could all be working together versus saying, I got to build my own because it doesn't exist, or I think I can run it better.
Great. So let's just pause for a moment and shift towards, we've talked about a lot of the positives and what's changing and what's exciting and the opportunity here. Are there any negatives that we should be addressing in this conversation? Are there risks that have, come to light? For example, Jen, I think you were just touching on it, new entrants, to the space, and, clearly, let's just say sustainable investing broadly has just really come to the fore in the conversation. I mean, in places that you wouldn't expect to see it, including traditional investment in asset management discussions. And so is there a risk in terms of quality, Another question that I was asked recently that I kind of had a visceral reaction to, but it's actually a really good question, is, what's the investment case now for concessionary returns in an era of really challenged pension funds and 401ks? And I was asked that question, somebody pushing back on the impact space. So I'm kind of curious what you might say to, that some of the risks are to the space and maybe how you might address that question. Anybody can really take that, whoever wants to. Jen, if you want to start with that.
Yeah, I mean, I'll take the risk that we faced it last year and 5 years ago. It's people coming in and saying they want to do impact as an asset manager and doing it the way they think they want to do it, which we're not saying is right or wrong, but you have to actually look at what's the underlying intent. I think people need to go back to companies and look at what is the company built on. How do they treat their people, their suppliers, their clients, their investors? What do they live out their values? This is more important than ever, right? We have major companies saying this is important, yet they do something that is in direct contradiction, right? I'm not going to call any of them out, but we have to hold them accountable. And so I think one of the risks that we face is dilution of mission, right? Is people trying to survive, and so the mission goes out the door. I think the other risk we face is the ability to disregard our environmental issues that we need to address because we're dealing with a social pandemic, right? We're seeing more plastic than we ever have because that's helping with what the current environment looks like. If we do not invest in a different environmental future now, we're in trouble in 3, 5, 10 years. It's not 10 years. It's now. Whatever we do today affects us 10 years from now. We have to invest in women. Women are higher unemployment, can't do their jobs. They're doing childcare, education. Now they're going to be doing camp, a whole slew of things. That will affect us in 10 years. We will not have women in middle management, higher management, and at the C level and in the boardroom because they will have had to take a step aside inside of the current environment. And so we have to figure out how we're going to navigate these risks that I believe are negative and turn them into something that's positive as an opportunity.
Great. Chintan, anything you want to add there?
Absolutely. So there's this, that famous Warren Buffett quote, along the lines of, right, when the tide goes out, you find out who's not wearing any like bathing suit, right? Who's not wearing their bathing suit, right? So that's his time right now, right? And I think it's really illustrated by the point that Will made, right? So there are, in the context of the SDGs or any of this stuff, right? Like the stuff that we're talking about here, like things that you're hearing from all these, these amazing panelists, is that there's a fundamental shift that's required in order to kind of be successful in the new world, in order to actually have a shot at tackling some of these massive kind of societal challenges that we deal with, and in order to survive on a micro level, right? As an enterprise, as an organization, as an entrepreneur, as an investment portfolio, et cetera. And I think that you have a couple of general approaches to this, right? One is check the box, right? Which is the old way of doing business, right? It's like, oh, look, here's a list of 17 SDGs and there's ticks next to 16 of them, right? And the obvious question should be, okay, great, let's look behind those and let's find out, what are you actually doing and how are you doing it? And what are you actually trying to accomplish here? Are you trying to accomplish a sale by, telling me that you tick 16 boxes out of 17, or are you trying to actually address the underlying problems, right? That those speak to. And I too would be pretty skeptical if someone said that they can hit 16 of them, right? Because these are really big fundamental challenges, right? And so as an investor or as a consumer or as a participant in any market that you're operating in, if you care about that, if that authenticity that Jen was talking about is important to you, which I think we're seeing increasingly, kind of that is the headline wave, right, that we're living in right now, of kind of businesses that walk the walk and they talk the talk, right? Authenticity is something that, large companies live and die by these days. Looking under the hood and understanding kind of how does this actually address a challenge, right? And the consistency is the other piece of it, right? How are you treating your own people? How are you treating the other, how do you operate in the market? How do you, operate in the world, right? In the environment that we live in, right? Like what's your social responsibility? If you're, if you're looking at a tick the box kind of perspective, then I think it's an indicator of kind of how you're approaching it, right? And when the tide goes out, those are the first things to be abandoned, right? Because then it's kind of like this marketing veneer, right? But it's not an underlying approach to how you go about doing business, how you go about kind of organizing, your investment portfolio and finding things to kind of invest in and back, et cetera. And so, bringing this back to your question, David, right? So the risk is that, with this new system, this new kind of, investing kind of landscape and new vocabulary and new concepts and all this kind of stuff, lots of people are jumping in. And one of the things that happens is that a lot of the oxygen gets taken up, right, from people that are doing really authentic work, by people who have really good marketing and really good communications, right? And luckily some of us have people like you, on the small set, David. But I think that's, there's a lot more, but maybe I'll leave it at that. Right?
Yeah. No, I appreciate that. And so we only have a few minutes left, so I want to do a quick roundtable of just quickly what inspires you right now and what keeps you going. And I'm going to start. I think there are two things. I mean, as a New Yorker, I think one of the things that really keeps me inspired is at 7 o'clock every night when everybody yells out their window and thanks the first responders and everybody who's on the front lines of this crisis. But the other thing that really, inspires me right now are folks like you who remind me that the world is a much smaller place and that we really are all joined together and working together. And I, take a lot of solace in that, a lot of encouragement. So Rahana, what about you?
Gosh.
What inspires you?
So many things. You took the words right out of my mouth, David. Deep appreciation, I think, for partners like the folks that you all have heard from today. To me, it's actually the organizations that are seizing the moment. I have been kind of blown away with how many firms are looking at this moment in time as the perfect time to create strategies and roll them out. We were expecting something different, as I'm sure many of our peers here were. We were expecting doors to be closed for a little while, and organizations are stepping up, and that's a huge inspiration. That's
awesome. Will, what about you?
I think I'm gonna, I think the smart move in any situation is to copy what Rahana does, and I think I'm gonna do that here. I have to eat some humble pie, which goes to the quarantine 15. But if you would have asked me 2 months ago, I'd say, listen, this is a terrible moment for impact investing. You'll have groups like Jen's and some of the foundations and groups that Chintan and Rahana advise will probably keep their allocations static. Anyone entering the space will definitely pull back. And we've seen anything but that, right? We've seen groups like Align just do more in this space. We've seen foundations and DFIs do more, and groups that I'd never thought to talk to are reaching out. So I think that's inspiring because I think that proved the pessimistic side of my personality to be completely wrong. And given just how starkly bad things are in the world, right? You have to look for those glimpses of sunshine and reasons for optimism.
That's great. Chintan?
Yeah, I mean, I guess it would be boring if I just echoed what Rahana and Will just said. But I will just say that I totally agree with both of those perspectives, right? The thing I would add to that is that what's inspiring to me are the kind of myriad of entrepreneurs that are out there that are massively challenged by this situation. And no one's just kind of lying down and giving up, right? Like that's not happening. You look at the media and it's like, oh, it's going to be carnage and this and that, right? It's like, you just see like millions of examples every day of people figuring out how to make it work, how to make it happen. And this is much broader than the impact space, right? In the impact investing community, right? But I think if you look around in your own communities, if you look around, kind of more broadly in the global economy, people that are just kind of surviving and figuring out new ways of doing what they used to do because the ground kind of changed underneath their feet in a blink of an eye. I think that's incredibly kind of both inspiring and kind of instructional, right? Like I think we can all kind of learn from each other and from all of those great examples.
Wonderful. And Jen, I'm going to end with you where we started. What comes to mind in terms
Yeah,
of?
I would echo what everyone said. I would say, as people know, I like to do things in three. I'm really inspired by human beings and their resiliency, and how they really are being resilient during this time. I'm really inspired by the creativity and innovation that we're seeing and how people are able to pivot. And I actually think we may have needed that to really move out of our own way. And I'm inspired by the people that we get to collaborate with, the people that are on this call, the change makers in the ecosystem, the people in my organization, and most importantly, the people that are willing to take the risk to move their capital and all of their capital and use every lever to build the world they want to see. And I'm inspired by the opportunities that are ahead of us in spite of the dark clouds that we're currently facing.
Thank you. And thanks to everybody who joined us today. This was a blast for all of us. We hope you enjoyed it as well. Thanks to everyone at Spectrum Impact for this opportunity. And we hope to see you all again soon. I think you've got all of our information if you have any more questions. And I think that wraps it up for us.
David, we would be remiss, I think, I'm going to steal the last word, if we didn't thank you. So thank you for taking us on this journey.
Absolutely.
I really, really appreciate it.
Oh, it's been a blast. Thanks, everybody. All right, we'll talk to you soon. Be well and stay safe.